Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are, and spending our brief time on Friday together, and we've got some questions.
Yes, a couple of questions from listeners. The first one's from David. Hi, Bob. I heard you mention a few times that a good option during a bear market for Canadian investors would be 4-year good-grade U.S. corporate bonds. You indicated it's likely you would see the return of your capital with interest, plus possible U.S. Canadian dollar appreciation. How would an average investor buy that type of bond? Is there a Canadian ETF or an American ETF or a specific company corporate bond you would recommend? Do these bonds trade like a stock symbol on the TSX? And would that be something to buy now or wait till there's a big decline on the market or the bear market is well underway? Thanks, your friend David.
Yeah, David, thanks. It's a good question, and one should be taking money off the table on sectors as they get overbought, rather than wait until there's a big decline to try, to buy some of these 4-year good-grade U.S. corporate bonds. Now, I looked a while ago, and there was no ETFs or anything like that for that, but it gets us into old-fashioned brokerage where you got to have dealing with a firm or with a broker who has the ability to sleuth out and find a 4-year U.S. good-grade corporate bond. And that is, unfortunately, going to take a little work. And also it's revealing that I'm not doing it myself. So, I think it will be a good position. It'll take a little work to get the position, but I think it'd be worth it. And but it's not, the business isn't like it was 30 or 40 years ago, where you had bond dealers. Well, you still got bond dealers and stuff like that, but the mix of business was such that most brokers could handle all kinds of inquiries or investments. And good question. Thanks a lot, David.
Another listener question. Greetings. Thanks for your interviews with Bob. Here's my question. Has anyone calculated how much electricity would be needed if everyone in the U.S. drove electric cars? How much electricity is currently produced in the U.S., and what's the difference?
Yeah, I can't quote you any numbers, but to go electrical for cars is a staggering commitment, because batteries are an inefficient way of storing electricity. Like the power density is hopeless. So, and then I just saw an article last night about if, you go in and top up your tank at a service station, and let's say it takes 10 minutes at the most. So, then you can cycle through maybe 1,000 cars a day. But if each car is sitting there on a quick charge for 45 minutes or something like that, you're going to have a huge area of these connections, electrical connections. And then also that's going to require a huge amount of wire and a huge amount of power. So here's the problem. And if they're going to get the power from windmills and from solar farms, there's a massive amounts of cement, rebar, everything else needed to build one of these huge wind turbines. And then there's also massive amounts of fiberglass and chemicals needed to build the big blades on the turbine. And then you need all kinds of rare earth metals and stuff to get the electrical side of it going. So what you end up with is just delivering the power. You'd have to, who knows, maybe make every service station 10 times as big as it is. And then in order to mine all of the stuff for footings and cement and that sort of stuff is a huge expansion. Now, that's just to build these things. But then when you've got a field of massive turbines, that takes up a huge amount of space. And the same thing holds for solar cells, which takes huge space. And it's just not economically efficient. Now, there's one thing that really wraps this up, and that is if you take the cost of energy to build a solar field or to build a huge array of wind turbines, it's just an immense amount of space and things. But the point being is that it costs more energy to build the device than the device can deliver by way of energy. And then you also have, and then another one I read recently is with in the Midwest in the States, where they got all kinds of alcohol plants where farmers take their corn, which is for feeding critters, including people, and it gets distilled into alcohol, and then it goes into gasoline tanks, where it reduces the efficiency of combustion. But here is the problem. In order to create a gallon of alcohol, it costs more energy by doing it through corn than you get out of the alcohol. So it's just plain inefficient, but the whole exercise is with authoritarians who get an idea, and half the issue is doing the project, whether it's windmills or solar cells, and the other half is you're forcing somebody to do something that they wouldn't otherwise do. And then, let's throw in a third here, where then the other part is the promotion that all of this green energy, and you see the articles all the time, they say the cost of solar cells are diminishing and cost of building wind turbines is diminishing, but hey, the real cost is the amount of energy to build the device compared to the amount of energy you get out of it, and it ain't working. So I think what it's going to take is a post-bubble contraction where the money really does run out, and then you'll get back to economic calculation rather than political calculation. And hey, I'm looking forward to it. Thanks for the question.
Yes, doing a little research here. According to an article in Forbes magazine in November 2021, if the U.S. went all EV, it would suck up 28% of all the power in the U.S., and they just don't have the capacity to do it. Chris Sims, friend of the show from the Canadian Taxpayers Federation, told me now the number is either 9 or 13 Site C dams in British Columbia would be needed if all the cars in BC went to electric vehicles, and the cost of just the one dam was estimated in February 2021 at $16 billion. So $16
billion for one dam.
For one dam.
Yeah.
And we would need 9 to 13 of those.
Let's just round it out to 10.
Yeah, so let's say 10.
Yeah.
So $160 billion to power electric cars.
Well, when you get to develop that many river systems, drainage systems, and Vancouver, of course, is the principal consumer of power in the province, but you'd be getting further and further away. I mean, these dams, Mica Creek and whatnot, those are, 500 miles away, and then Now, whatever valleys are best suited for putting up hydro dams are already installed, so that means you have to go yet further away. So further lengths of power lines. But really, I think another source, when practicality returns to the political system, is, of course, nuclear power. They're able to build small plants, efficient, close to where the power is going to be consumed. And in the meantime, natural gas plants are very efficient, and coal is less so, but it's getting a whole lot cleaner for electrical power plants than it ever was in history. So if you look at the political side, as the term I used was, political calculation is dominating, and it will be a disaster. And then you go back to economic calculation, whereby the decisions are in the hands of the consumer. So I'm looking forward to it, Jim.
Now, if we went to helium reactors, they're very safe because helium doesn't become radioactive if you use it as a coolant. And so you could have an atomic reactor the size of a phone booth in your community, and of course you put a big concrete dome over it to prevent any accidents anyway. But if it did leak, it's not as dangerous as our typical reactors like Fukushima, which melted down, and so on. So
well,
you know there are alternatives.
The problem was not with the nuclear plant. It was with the diesel engines that were there to run things in case the nuclear side was shutting down, or to keep things cool. And then the tsunami drowned the ability to have standby operations. So the problem was not the nuclear side of the plant; it was the side that looks after things when you shut down the plant. So there is an amazing superstition against nuclear power, and but I think all of this will end when, as you say, you shift from political calculation to economic calculation.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, another thing that maybe we should add on top of this electrical car debate is right now governments collect a tremendous amount of money from gasoline taxes to help pay for roads and other things. So I can imagine in the not too distant future, if you drive an electrical car, there will be mobility pricing. In other words, you'll have to write down or take a picture of what's on your odometer today or at the start of the year, and then send in another picture at the time of your license or insurance renewal, and you'll be charged a fee. I don't know, 10 cents a kilometer, 15 cents, 25 cents to help pay for roads. The government never mentions this, but of course the revenue lost from gasoline will have to be replaced in some way, and I would imagine that's probably the way they're going to do it.
Well, of course, if you talk about gasoline taxes, they originally were put on, and the money was to go to building roads, bridges, and that sort of stuff, and maintaining them. And then, of course, it becomes irresistible, and in most regions, the tax revenues then go into general revenues, not specifically for highways, and the result, the infrastructure of highways and bridges and roads and all that sort of stuff has been neglected. So, the problem is that governments do things stupidly, and there's nothing you can do to change it. So the only thing that can be done is to make sure that side of the political contract, social contract, is as small as possible. You can't get them to make the right decisions. So you just make the government as small as possible relative to the size of the economy, and I believe that will happen at some time. We're heading for a major reform, political reform, and I'm looking forward to it.
Yes, I remember Prime Minister Trudeau was asked about monetary policy, and he said, I don't worry about monetary policy, and I just tweeted, isn't government about how much money do we have, what do we spend it on, and how do we raise it? Is that not monetary policy? Well, he's admitted he doesn't know anything about it.
No. No, he's not a profound thinker, that lad.
Now, he has nice hair. No one debates that. The nicest hair. No, I think Candice Bergen might have the nicest hair in the Canadian Parliament.
Okay.
If we're debating hair, the great hair debate and how important that is to Canadians. But if you're a politician, hair, I think, is probably pretty important. Anyway, now we have some headlines to check out. The first one, here's why a Russian bond default would be very, very messy.
Yeah, the main thing on the headline is that the Russian bonds, as we've been talking, now these are treasuries, sovereign bonds, and they were, in early March, the two big rating agencies, Fisk and Moody's, marked them down 6 notches to junk. And that is a hell of a hit. So, but I think that their bond market has since reopened, and it's probably had a bounce back to relief. So, but when you get a panic like this, it really does tear the credit markets apart, and this year, over the last year, beginning in March a year ago, we saw announcements that Argentina, South Africa, and Turkey had their central banks had suddenly lost liquidity, so the country was suffering a liquidity crisis. And that's a heads up on if you're in a bubble year that things are starting to go wrong. And then beginning around May or June, the same thing was discovered in China with our long-term friends, or at least since last year, Evergrande. It's still in problem. So what you have now is with this financial panic and hit in Russia, where their currency got trashed and their yields soared up to 19%, that's a setback that's hard to recover from. So I took it as that Russia has now joined the post-bubble contraction that China has been suffering. So this is now the post-bubble contraction has reached Eastern Europe. And then, of course, we will notice it here when it finally hits New York and London. And when you get those senior financial markets in trouble, then you're in the full contraction. So at some point it'll happen.
And another headline connected to China, Evergrande units unable to publish annual result by the March 31st end of the fiscal year.
Yeah. Yeah, I saw that one. And
are they cooking the books,
headline,
Bob?
Jim?
Are they cooking the books?
My guess is they haven't got the money to pay for the staff to do the accounts.
Wow.
Or maybe they're having to cook them so much that it takes time to falsify accounts. Who knows? But it's a bad sign. Not a big headline, Jim, but an important one.
Well, I recall so often China at the start of the year would predict 6.7% growth, and a year later they would proudly announce we had 6.7% growth. Not 6.6 or 6.8, but exactly what the government predicted.
Mm-hmm.
And as you know, fiscal things don't go exactly as predicted.
Yeah.
That's usually the sign of a Ponzi scheme, isn't it? If the numbers go up exactly as predicted?
Sign of a fix, yep.
Yeah. Chairman Powell says he's ready to back a half-point hike in interest rates. How is a half-point hike going to rustle down inflation?
Well, this is a fascinating study. And I did a review on the senior central bank, now the Fed. Beforehand, it was the Bank of England. And there's been booms and busts forever. And when in a boom, short-dated interest rates, as determined by market forces, go up, like Treasury bills, and they trade, nowadays 24 hours a day. And then you have what is called the administered rate, which I guess you can call it the Fed funds rate. Anyways, set by central bankers. And in England, it used to be, well, back with the Fed in the early days, they manipulated the discount rate, and then they come up with something called the Fed funds rate. But the pattern, Jim, has been that when interest rates were heading down, market rates of interest, the Fed would eventually follow, and with their administered rate and reduce it. And similarly, at the top of great booms, short-dated rates go up because commodity prices go up, and the rate of inflation goes up, and investors want a higher return. So history says that in a boom, short-dated interest rates go up. So here you have the Federal Reserve, which is posing that it runs everything. And you've had, as to say, the headline talks about Powell, the head of the Fed, discussing raising their administered rate by half a point, or 50 basis points. But if you take a look at the T-bill rate, it's gone up by about 46 basis points when I looked yesterday. So the rise in interest rates is happening, and the Fed is pretending that it's a policy measure and whether they should or not. Now, some people in the street would say, oh, yeah, the T-bill rate went up because the Fed is going to raise its rate. But I would suggest, and as I say, I got a couple of 100 years evidence on this, is that interest rates go up in a boom, the senior central bank follows, and then it goes down. So if we want to go back to the great bubble that completed in 1929, you had the T-bill rate rise up until, it was May or June of 1929, and then it turned down. But in reading the notes, Fed notes and articles and stuff about that period, at Christmas time, the Federal Reserve, some on the Federal Reserve, were very concerned about radical speculation going on, so they wanted to raise rates, but they were going up anyways, but make a stand and show that they were concerned about the wildness of the markets. But those who wanted to raise rates were offset by those who didn't. But at any rate, I guess with summer holidays or something like that, the little clique within the Federal Reserve that wanted to raise rates, well, they raised them in the middle of August 1929 from 5 to 6%. But the T-bill rate got up to 5% in June, and it had already turned down. Now, what's the story behind the market rates of interest turning down? Well, they always go down in a contraction. So then you had the Fed then cut their discount rate in October because the economy was weakening and the stock market was crashing and interest rates go down in a contraction. So I'd say that all the discussion about whether the Fed was going to raise rates, 6 months ago, and then the confidence now that the Fed is going to do a half point a rate increase, and that it might be one of many, that is conjectural. The main thing to understand is that in a boom, short-dated rates such as T-bills go up, and the Fed follows. And then after the boom is over, the T-bill rate goes down, and the Fed follows. So even in the early 1930s, that T-bill rate fell, I think, 1931 or 32 down to, I always remember the number, 0.08%, which is effectively zero. And the Fed dropped its discount rate down to pretty close to that. So there's a whole lot of nonsense going on about whether the Fed actually does things or not, or whether it actually just follows, just responds. But when you're at the end of a great bubble, it's easy to point out that their followers, not movers and shakers.
Now, we have some breaking news out of Victoria, British Columbia, the capital of BC, that ICBC, the public auto insurance company, is going to give a one-time high gasoline relief rebate of $110 to customers and about $165 to commercial customers. But, Bob, April 1st, the carbon taxes go up. So effectively, I would say at the end of the year, that one-time relief check is going to be eaten up by tax increases.
Yeah. Well, that's another thing of government giving something to the folks, at least the appearance of that. But we have the highest gasoline prices, not just in Canada.
North America.
Well, I think at the pumps in Los Angeles you're getting up to $7, but I don't know whether that a gallon. I don't know how that converts to.
It's a little over $8 per U.S. gallon in in Vancouver.
Yeah,
where we were well over $2 a liter for a little while.
Yeah, well, it's of course a good portion of the cost of gasoline at the pumps is taxes. And those taxes used to were specific for highways, and now it goes into general coffers. So, no, the governments are scamming everything in sight, and this is just another opportunity to kind of look good and sending out checks again. And how much does it cost for the government to send out a check? My gosh. So, anyways, it's more foolhardy government policies.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and looking forward to getting together next week.
My guest has been market historian Bob Hoye. If you have any questions for him, you can send them to info@howestreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of Howe Street Media Incorporated.